Hello, everyone. It's Carson here with Remax. Ladies and gentlemen, if you've been following the real estate market as well as the current economy, you'll probably know that it has been slower in the market. And I've been having many conversations with homeowners and sellers. We've been discussing things like rates and how that would affect the market and especially buyers, those of you who are buying. And I was of the opinion that we know for a fact that the Bank of Canada is set to announce another interest rate policy announcement tomorrow. And there's going to be another one on December 11th. And it is of my opinion that likely this one may affect some, but majority of buyers are most likely waiting for at least the December interest rate announcement as well, because as some of you may or may not be aware, there is a lot of experts are saying that the rates will probably drop by 50 basis points tomorrow, and it's very likely that it might drop another 50 basis points in December. We don't know for sure, but that's looks like that's the trend, especially since the CPI that just came out, the results for September was at 1.6%, which is lower than what Bank of Canada was targeting. Let me just share my screen here with you really quick. So if you can see here, oops. You can see here the current policy interest rate, overnight rate is 4.25% as of September 4th, 2024. Current CPI inflation was 1.6% in September. And so if we click on this right here, you can see that starting on June 5th of this year, they dropped it by 25 basis points. In July, they dropped it by another 25 basis points. In September, they dropped it by another 25 basis points. So in total, we've dropped 75 basis points, which is 0.75%. But it seems like that is not enough, or that is, not enough to, I guess, put a hold on the slowing economy. I guess the economy is slowing faster than what they're expecting. And as you can see down here, the schedule for this year, there are two remaining interest rate announcements. The first one is tomorrow, October 23rd, and the next one is December 11th, followed by January 29th of next year. So if I had to guess, I would say that most people would probably wait for at least December, because if tomorrow is a 50 basis point cut and December is another 50 basis point cut, that would put you at a whole percent of interest rate reduction, which is huge, because they've only dropped it by 0.25% the past three announcements, and if they were to do that in 2 months' time, then that would be huge savings for potential buyers, and they're in their pocket, because the monthly payments would be a big difference. Now, I saw an article today which I thought was very interesting, and that's why I made this video, because I wanted to share with you guys. It sort of confirms what I was saying, and you'll see here, it came out today, and it says, Bank of Canada rate cut unlikely to move the needle on housing market, says poll. 74% of Canadians say they need rates below 3% before they buy. So you'll see here, it says the Bank of Canada is widely expected to cut its benchmark rate by 50 basis points tomorrow. No surprise so far. That's a big cut, but is it enough to entice buyers back to the Canadian housing market, who so far have been holding out for a lower rate? Not according to this new poll. The survey conducted for mortgage comparison site everyrate.ca in late September found that 74% Canadians who are considering buying or refinancing need policy rates to drop below 3% before they act. Okay, remember, we are currently at 4.25. So they needed to drop below 2, which is pretty much like COVID, before COVID, or during COVID. We knew Canadians wanted lower rates We knew Canadians wanted into the housing market. We just didn't know how low they needed rates to go before they get off the sidelines, said Andy Hill, mortgage broker and co-founder of everyrate.ca. Most Canadians are clearly waiting for rates to drop before moving further. The Bank of Canada has reduced its rate by 75 basis points since June from 5% to 4.25%. The cuts have brought some relief to Canadians renewing their mortgages, but failed to significantly revive the country's stalling housing market. Nationally, home sales increased slightly in September, but new listings grew faster, leaving a surplus of properties on the market. Looking at September's ho-hum housing figures, it feels like we're in a moment just before a starter pistol goes off, said Clay Jarvis, a spokesman at personal finance company NerdWallet. The market's loaded with new listings, but buyers still aren't ready to run headlong into gigantic mortgages. They could be waiting for some time. Most of Canada's big banks don't expect rate to fall below 3% until the first quarter of 2025 or later, with the Bank of Nova Scotia forecasting a 3% rate at the end of next year. Given the current rate trend, we might not see policy rates below 3% until late 2025, said Hill. That means many potential buyers and refinancers will likely stay on the sidelines for the foreseeable future. Victor Tran, a mortgage and real estate expert with rates.ca, said that while a 50 basis point cut will bring some back to the market, many buyers may choose to wait for the Bank of Canada meeting in December, which is sort of what I've been saying. Buyers are holding out for the bottom of the market, said Tran. The challenge is that no one can predict when it will be, and once the market shifts, it's likely it will heat up quickly and push up house prices. If buyers wait too long, they may find themselves trying to buy with a lower mortgage rate but higher house prices, which I completely agree. I have been saying this for many, many years, and if you try to time the market, you can sort of time it, but to the extent where you try to time the bottom or you try to time the top, it's sort of like buying stocks and timing stocks. And I think it's very, very difficult to be able to pinpoint the exact top and bottom. And if you wait for too long to act, you could potentially get burnt. So it further says younger Canadians aged 18 to 34 were especially conscious of interest rates in every rate survey, with many saying they needed rates below 2% or even below 1% to consider buying or refinancing. Now, this is actually surprising that they said they wanted to be below 1%. I guess we've just been, the last 10 years, we've just been so used to low interest rates that that's sort of been the norm of what the next generation have been used to. But 1% is quite alarming. I mean, if we had to put rates at 1% again, that would be, in my opinion, I think that would mean we would be in a very bad situation for the economy, and that would force the Bank of Canada to sort of stimulate the economy by lowering rates and forcing people to spend money, force people to not save, because if you think about it, also when you're saving, you have less rates, right? So there's less of an incentive for you to save if the rates are lower. And then also when on the borrowing side, if you borrow, the percentage is low, so you're more likely or more inclined to be incentivized to borrow. And so as a result, when you're borrowing, you're usually spending that money that you borrow on something, right? Be it buying a house, buying a car, or buying something else, renovation, whatever it may be. So rates below 3% aren't just preferable, they're essential to making home ownership possible for this group, said the survey. So it looks like in the survey, many of the respondents who are aged 18 to 34 are saying not only is rates being below 3% something that are just preferable for them, it's something that's essential for them in order for them to be able to own a home. The 26% in the poll who would buy or refinance regardless of interest rates were mainly older Canadians over 55 years old. And that makes sense because I guess many of them already own a home and have been owning a home for quite some time, and they're just pretty much either halfway through or finishing up their mortgage. And so it would be silly for them to, I guess, forgo their everything they've been building up this whole time, or they would have to sell and downsize or make some changes. But obviously, this current market has been slower, so it's not like they can quickly liquidate what they have on in terms of their assets. So here further it says, with the high cost of housing in Canada, the younger generations may need more than interest rate cuts, said the survey. Policies to improve housing affordability could help bridge the gap and make the market more accessible for first-time home buyers, it says. And then here it says, leading indicator, bullion going up. There's no shortage of gold records lately, but yesterday truly was a milestone. Gold rose to $20 US an ounce Monday morning to hit 2,753, which is not just a new nominal high, but also an inflation-adjusted high, said Stefane Marian, economist with National Bank. The last inflation-adjusted record was set in January of 1980 at 2,742 per ounce. National Bank expects gold has further to climb. Rising government debt, decreasing geopolitical uncertainty, and growing protectionism create the ideal conditions in which the yellow metal typically thrives, said Marian. So, as you can see here, touching on a few points that we talked about already, it seems that if people are to wait, likely they are going to wait until at least December. And I am of the same opinion. And not only that, it further says, the survey says that people need the rates to be below 3%. So if we were to drop 50 basis points tomorrow, that would bring us to 3.75 for the overnight lending rate. And then in December, if it drops again to another 50 basis point, that would be 3.25. But they're saying they need to be below 3%. So it's below 3%. I think we would probably get there, if not by the first quarter of next year, maybe the second half or the first half of next year. That's my personal opinion. Of course, that depends on a lot of factors like how the economy is and what the Bank of Canada thinks in terms of trajectory for the economy and the direction that it's going. But I think right here, they do have a very good point, which is the challenge is that no one can predict when that will be, right? Buyers are waiting for holdout for the bottom of the market, and the challenge is no one can predict when that will be. And once the market shifts, it's likely it will heat up quickly. And I talked about this earlier, and I'm just going to touch on it again. I think that is very, very true. It will be very hard to predict, and you might be caught in that transition, which could end up being, you could end up being burnt more than having to stand to gain. And so all I'm saying is, if you are currently somebody who's thinking about getting into the real estate market, it's actually not a bad time, because rates may still be high, but we have a rate cut coming tomorrow. We have a rate cut coming in December. When you have a offer in place, you typically have a timeline that you set to close on the transaction or on the property. And that could be sometimes anywhere from 30 to 90 days out. And I've seen in some scenarios where it could be further out, as much as 4 to 6 months. It's more rare, but it's not unusual. And so if you were to secure a contract of buying a home today, and the contract states that you're not closing until, let's say, 3 months out, for example, or even 4 months out, well, that means you could potentially be benefiting off of the rate cut from tomorrow, the rate cut from December, and possibly the rate cut from January, depending on how quickly you close on the home. And so I could see you would at least get, if you were to head to January, worst case scenario is we get a 50 basis point cut tomorrow, we get a 25 basis point cut in December, and another 25 basis cut in January. Worst case, you might get somewhere between, or maybe no adjustments in January, but worst case, I think you would get at least 75 basis points or to 1% at the very least, which is really big because we're at 4.25 already. That brings you to 3.25. Now I know it says here people need to see, or many of the potential buyers want to see the rates be below 3%. But here it also says they may find themselves trying to buy with lower mortgage rate but higher house prices, which is very, very true. And I've been sort of saying the inverse of this when they increased the rates back in 2023, I want to say. It's when they first increased the rates. Yeah, 2023. Back then, when they increased the rates, yes, rates went up, but housing prices also went down. So when you do calculations for your mortgage payments went up because rates went up, even though prices went down. And it actually went up a little bit more than before. And then on top of that, you're actually paying more towards interest than your principal. So we can use a mortgage rate calculator. Let's take, for example, $1 million mortgage, and we're going to do 30 years amortization, monthly payment. And back then, I remember the rates were as low as, let's say, 2.99%. Let's just say fixed for the calculation here. Mortgage was $1 million, 2.99%. And then when we went up to 5%, let's do $1 million. The price went down, let's say, to $800,000. 30 years was it? Amortization. Yeah. And then it went to 5%. There you go. So you can see that at $1 million, 2.9% versus 800,000. So the price has gone down, but the interest rates went up. You're actually paying slightly more with your payments, which is crazy, but it is. And you can see that the amount of interest that you paid over the 5-year term, you're actually paying about $50,000 more. All that's happening here is the banks are making more money by collecting more interest. Whereas if you would have bought prior to, you would have done, a lot better. And that was probably why the market was so active when the rates were at this point. And once it started going up to 5%, even with a $200,000 reduction, it hasn't really made a dent on the payments. And I think that's the biggest challenge that most buyers are having, is the monthly payments are just too unaffordable. And not just that, the stress tests, you have to tack on another 2% to qualify, which is the biggest, I think, challenge that buyers were having. So on the inverse here, even if rates were to go down, if prices were to go up, so we're from here, and let's say it goes back higher than this, which it possibly could, because we've seen this happen before back in 2015, 2016, 2017, and we've seen this back during COVID. We've seen it happen where prices skyrocket dramatically, and even with rates dropping lower, you may not be in an ideal situation, because you might be fighting for homes now. There might be not enough inventory or housing or listings for people to choose from, and so now multiple offers start happening again. You're paying over asking, just to try and secure a home. And yes, your mortgage payments may look a little bit more appealing, but at the same time, you're paying way over and you may not have as much selection. So it's like a feeding frenzy. Um, and people are fighting over homes, and you may not be in a good situation either if that's what you're thinking. If you're thinking, oh, the lower rates will help me, yes, I agree, it will help you in terms of your monthly payments. I agree that it will help you in terms of qualifying for the stress test, but it may not help you in terms of being able to find the house that you like or you want. Whereas in a calmer market, you have this ability to do so. um, because let's be honest, housing prices are very, very expensive these days. And not only that, um, people want to be able to stretch their dollar and get every single feature that they want, because they're paying big bucks for the home, in comparison to the income that they're making, in today's world versus 30 years ago. And so, um, it's going to be a lot harder to do that when everybody is also looking for a home. And one other thing I just want to mention is I've been working in real estate for the last 12 to 13 years. And one thing I notice is that a lot of people are on the same page in terms of preferences. A lot of people prefer, obviously, a newer home. A lot of people prefer not to have to renovate. A lot of people prefer, they prefer to have a nice backyard. They prefer to have a mortgage helper. There are a lot of things that a lot of people are on the same page on in terms of preferences. So if you want a particular something, I can almost guarantee you at least half or maybe even more than the other demographics or population of potential buyers out there want the same thing. So if you see that home, and when the market is busy, because everybody else is now finding that interest rates are lower, it's much more palpable um, to to take on. Well, you're looking at that house that you really like, that's on the cul-de-sac, that's nice and quiet and it's close to, I don't know, a green belt or something. I'm pretty sure somebody else is also wanting the same thing. And so there's a really high chance you'll be fighting for it. And unfortunately, only one person can buy the house. So if you and, let's say, 10 other people or 20 other people are fighting for it, well, your chances are, I guess, 1 in 20. Well, it's not just 1 in 20, because 1 in 20 means you have an equal chance with the other 20 people, but that's not how it works, because when you're in a multiple offer situation, it usually comes down to the price that you're offering. And so if you either cannot come up with a higher price or you don't want to come up with a higher price, then you'll always find yourself on the short side, the losing side, which means you won't get that home. And then you'll have to move on to the next one. And the next one may not be the one you want, but it may be the one that you're willing to settle for because it's close enough. And then you'll be in the same situation again, which is remember, those 20 people only won one. So that means 19 others are now moving on. And you could be faced with the same 19, or not always all 19, but some of the same people. And again, you could be fighting with that as well. And you could again lose. And that would take you to, again, the next home, which again, you might be selling for. And again, those people who are left over, or there's other people who are now coming into the market as well, also looking to buy that home. And you may find yourself in a very, very difficult situation. The other thing is, I found that many homeowners, now we're talking about, you as a buyer, we're talking about people who are selling. If you're selling, many homeowners obviously prefer to sell when the market is hot, when it's doing well, because they know that they can get a higher price. They know that, they can sell it a lot easier. It's a lot quicker. It's a lot more convenient, a lot less stress. And so there are many homeowners out there who are waiting as well. And so for those people who are waiting for the market to do better, well, guess what? They're looking for more money. The reason why they're waiting is they're looking for more money. The reason why people who are in today's market selling, you have to think about this, they're selling because they are really motivated to sell. There's a motivation to sell. So what does it mean by motivated? It means they have um, a strong desire to sell. I don't know the reason, but some reasons could be maybe they're going through, um, they're they're getting transferred, they're relocating to another job, or another province or another country. Maybe there's marital problems and they're separating. Maybe they're going through financial problems and they can't continue on the mortgage, or they're no longer able to continue payments, or somebody lost a job or something. uh, could be an estate sale where somebody passed away for whatever reason. Could also be a foreclosure. But usually, people who are selling in today's market have a strong desire to sell. Or maybe they sold their home already, or sorry, maybe maybe they bought something and they have to sell this home in order to take cash out to buy the other home. Whatever the reason is, they have a strong desire to sell. So if they have a strong desire to sell, that means they're not going to be waiting around. It means there's a chance that you may be able to also leverage that and negotiate with those potential sellers. Whereas in the other market, you will be negotiating, but you'll be negotiating up, not down. And most people are, most people, I don't know about you, but most people don't want to pay more. They like to pay less. So that's sort of the reason why I think right now may not necessarily be a bad time to buy. If you're able to start getting pre-approved, start looking for a home. By the time you secure a contract, we've already had a rate cut tomorrow, and then if you close in a few months' time, 2 to 3 months, you may be overlapping with another at least one or two interest rate announcements, and you may benefit of that and be ahead of the market. Versus if you're like everybody else, waiting until December or even waiting until January, well, you're just running with the rest of the herd, right? And just like that analogy of running with the rest of the herd, well, how likely are you going to be in the front of the herd? Um, I don't know. I think you're leaving it to chance. You're just going to be running with the herd and not ahead. Whereas if you get a head start now, you'll be ahead of the game versus behind. So those are my 2 cents and sort of my opinion. If you're currently selling, again, from what you can see in this article, it is going to be a bit challenging. You'll have to be patient in the meantime, because from what you can see from the survey, many people are waiting, as we have already expected, for the rates to go lower, because it all comes down to affordability. That's end of the day. I think that's the sort of end game, is affordability. Can I afford every month to make this mortgage payment? And not just for buyers, but for the banks to assess the buyers, um, I guess, service ratio, whether or not they are able to afford to make those payments on top of paying your groceries, paying for your car, paying for insurance, paying for your telephone bill, your TV, your internet, and whatever other expenses, electricity, gas, all your other fixed expenses, and surprise expenses that you may have. Can you afford it? The banks will look at that as well, and that's part of their qualification criteria, as well as stress tests, to see if rates do happen to go up again. Can you afford to continue to make payments if rates go up? And so that's where we're at right now. I think if you were to sell your home in the spring, you'll probably have more success. You may even have better results in terms of sort of the price you're getting. But I do understand that certain sellers don't have the luxury to wait until the spring, like February, March. Like I was saying earlier, some people have a strong desire to sell, they're motivated to sell. And so, um, with that being said, I'm not saying homes don't get sold, but they do take time. So if you're a seller, you'll probably have to be patient and be of understanding that the market is slower. And so you may have to adjust your expectations in terms of what sort of price you might get for your home versus what you want in terms of price, if you're not able to wait. If you're a buyer, like I said, I think you have a very golden opportunity. I know it's hard to see that sort of light at the end of the tunnel, but this is, me trying to tell you that if you want to take advantage of the situation, it's 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 a really ripe time to do it. But of course, if you're not ready financially or mentally or physically, I understand as well. But just bear in mind that once the market starts picking up, likely in the first quarter of next year or the first half of next year, it will really pick up, and it will be very difficult, likely more difficult than in the situation we are now. So that's it for my video. I hope you guys liked and enjoyed it. I hope it was helpful. If you did like what I've been saying here, please consider subscribing too if you wanted to stay up to date on the newest updates on the housing market. And I'll see you guys in the next one. Thanks. Bye.